Welcome to the world of Forex trading, where the markets never sleep and opportunities are limitless. In this exciting financial landscape, understanding the power of support and resistance is crucial. These key levels act as a guide, helping you navigate the ever-changing currents of the market. By recognizing and capitalizing on these vital trends, you can ride the waves of success. Whether you're a seasoned pro or just beginning your journey, our mission is to bring Forex trading to the fingertips of all who seek financial freedom. Join us as we elevate your trading game and increase brand awareness, empowering individuals from all walks of life to unlock their full investment potential. Start your journey today. Hello there. Welcome to JevU's platform. If you are yet to subscribe to this channel, please do so now and click the notification bell to get notified when I release the next videos. Today we shall be talking about guidelines for drawing trend lines. Number 1. Multiple touch points for a valid trend line. It should ideally have multiple points where the price touches or intersects it to consistency. The trend line should consistently follow the general slope of the trend. 3. Avoid overfitting. Avoid drawing trend lines that perfectly fit every minor price fluctuation. Instead, focus on capturing the broader trend using trend lines in trading. Number 1. Entry points. Traders often enter positions when the price bounces off an uptrend line or breaks below a downtrend line. 2. Exit points. Trend line breaches may signal potential exit points or the need to reassess the current trend. 3. Confirmation with other indicators. Confirm trend line signals with other technical indicators or chart patterns for a more comprehensive analysis. In summary, trend lines are a valuable tool for traders in Forex charting, providing visual representations of trends, support and resistance. However, like any technical tool, they should be used in conjunction with other analysis methods to make well-informed trading decisions. Continuous practice and refinement of drawing and interpreting trend lanes contribute to a trader's ability to navigate the dynamic Forex market, successfully. Moving averages. 1. Simple moving averages, SMA, and exponential moving averages, EMA. Moving averages can act as dynamic support or resistance, with prices often bouncing off them pivot points. 1. Daily, weekly, or monthly. Pivot points calculated based on previous high, low, and close prices. Pivot points can serve as support and resistance levels. Significance of support and resistance. Number 1. Price reversal. Support and resistance levels often mark potential reversal points, signaling shifts in market sentiment. 2. Trend continuation. Breakouts above resistance or below support can indicate the continuation of an existing trend. 3. Risk management. Identifying support and resistance helps traders place stop-loss orders and manage risk effectively. 4. Decision points for traders. Many traders make buying or selling decisions around these key levels, making them influential in the market. Trading strategies with support and resistance. 1. Bounce trading strategy. Buy at support. Enter long positions when the price approaches a support level, anticipating a bounce. Sell at resistance. Enter short positions when the price approaches a resistance level, expecting a pullback. 2. Breakout trading strategy. Buy on breakout. Enter long positions when the price breaks above resistance, anticipating a sustained upward move. Sell on breakdown. Enter short positions when the price breaks below support, expecting a sustained downward move. 3. Range-bound trading strategy. Buy near support, sell near resistance. Trade within the range defined by support and resistance, buying near support and selling near resistance until a breakout occurs. Conclusion. In Forex trading, support and resistance are indispensable tools for technical analysts. Traders can use these levels to make informed decisions about entering or exiting trades, managing risk, and anticipating potential trend reversals. It's crucial to integrate support and resistance analysis with other technical indicators, and to consider the broader market context for a comprehensive understanding of price movements. Continuous practice, observation, and refinement of strategies are essential for mastering the art of identifying and trading around support and resistance levels. In the dynamic Forex market, We will take a break here today. If you have any question, let me know in the comments section. Trade safely.